It's Boxing Day, Monday, the 26th of December, and welcome to your 5-minute briefs from Seoul. I'm your host, Heejin Koo. In our final installment for 2022, we'll preview what's in store for Asia's fourth largest economy in the coming year and the central bank's priority for next year, which is stabilizing prices. We'll also explore how soaring prices are causing fussy buyers to cherry-pick best deals, the South Korean government's push to boost its real estate and nuclear power generation builders to help prop up its economy, and how Hyundai, LG, SK and other South Korean business giants are pouring trillions of won in investments into EV batteries. Let's begin our 5-minute roundup. Asia's fourth largest economy will likely see its growth slow to 1.6% next year amid persistent challenges both at home and abroad. The Finance Ministry lowered its 2023 forecast by a whopping 90 basis points from its previously rosy 2.5% outlook in June. It is also darker than those by state-run Korea Development Institute and the Bank of Korea, which earlier predicted growth of 1.8% and 1.7% respectively. The ministry said sluggish trade and high interest rates will impede recovery next year in areas such as exports and domestic demand. Finance Minister Chu Kyung-ho said growth will likely decelerate in the first half of the year, adding that a slight rebound is possible in the second half. South Korea's economy has only dipped below 2% in 5 times in modern history, the latest of which was in 2020, when the economy contracted 0.7% due to the pandemic. It then bounced back and posted growth of 4.1% last year. The ministry also cut its outlook for this year by 0.1 percentage point to 2.5%. The government, meanwhile, expects inflation next year to grow 3.5%, down from this year's 5.1%. The Bank of Korea hinted that it will maintain an upward momentum in benchmark interest rates next year, as it plans to place its top priority on fighting inflation over boosting growth. The central bank governor Lee Chang-yong said further rate hikes early next year will be inevitable in order to stabilize prices and meet its target inflation of 2%. The BOK placed its 2023 inflation outlook at 3.6%, compared with 5.1% in 2022. Monetary policymakers have been leaning towards additional hikes after the U.S. Federal Reserve raised its target range by 50 basis points earlier this month. The move widened the gap with South Korea's benchmark to a 22-year high of 1.25 percentage points, which has prompted concerns of a possible outflow of cash in search of safe haven assets. It is all too aware of Fed Chair Jerome Powell's hints that the FOMC will maintain its upward momentum and a vice grip on fiscal policy to offset inflationary pressure. Such soaring prices are prompting South Korean consumers to pore over options to find what they consider as best deals, according to features by the Korea Herald and the Joseonilbo. These so-called cherry-sumers, a portmanteau word of cherry picker and consumer, go to great lengths to try and retain the little joys in life to get the most bang for the buck. For example, people will post online to form groups for joint purchases by bulk, for joint Netflix accounts or other savings on OTT platforms, or even on group meal deliveries. Consumer Studies Professor Rando Kim at Seoul National University noted in his most recent Consumer Trend Insights for 2023 that such a trend means that there is no longer an average or standard consumer, especially in a multi-segmented society and a widening gap between the haves and have-nots. South Korean retailers are shifting to meet such demand. second-hand trading market platform 당근 Market launched a Let's Buy Together page in July for the heavily populated Greater Seoul area. Joint purchasing platform Always, which links bulk purchases opportunities between sellers and buyers, saw the number of registered users grow to 3 million during the 12 months since its launch in September 2021, with accumulated sales reaching 60 billion won. And as the nation braces for an economic slowdown, the South Korean government is hoping to stave off the worst by easing real estate regulations, boosting support for domestic nuclear reactor builders seeking overseas contracts, and encouraging future-oriented sectors. South Korean President Yoon Suk-yeol pledged during his town hall discussion with the public on December 15th that he will place top priority on easing restrictions, undertaking reforms, and encouraging businesses to help steer the economy back onto a path of recovery. Yoon also vowed on December 14th to double next year's budget for the nuclear reactor construction industry from this year's 1 trillion won. The government plans to help reactor builders win overseas contracts, foster jobs, and finance research and development. He further pledged to restore South Korea's status as a global nuclear energy powerhouse. Finance Minister Chu Kyung-ho said during a radio interview on Christmas Day that the government will lift additional real estate trade regulations following its initial easing in November for areas outside Seoul. It also plans to submit a revision bill in February aimed at easing heavy property acquisition taxes on multiple homeowners to help curb a sharp decline in the property market. Meanwhile, the National Assembly on December 24th passed a 639 trillion won or $500 billion budget bill for 2023, the Yoon administration's first, which includes some of the plans regarding real estate, nuclear power generation, and corporate tax cuts. South Korean companies are sharply increasing investment into one industry in particular that will most likely withstand a global recession: electric automobiles, namely the batteries that go into EVs, as they see rising demand for electric cells. South Korea's top automaker Hyundai Motor Group announced on December 12th that it'll partner with SK Group's battery-making arm SK On to invest $4 billion to build a joint manufacturing facility in Georgia, which will likely begin rolling out cells in 2025. LG Energy Solution and auto giant GM agreed early this year to invest $2.6 billion to build their third joint venture, Ultium battery manufacturing plant in Lansing, Michigan. This is in addition to their first and second plants in Ohio and Tennessee. South Korea's top EV battery makers such as LG Energy Solution, SK On, and Samsung SDI expect global demand for their products to grow in the future as the world increasingly swaps fossil fuel power for cleaner emissions-free energy. According to energy market research firm SNE Research, South Korean EV battery makers are poised to take some 45% of the North American market. Analysts at Moody's Investors Service said in a December 23rd interview with the Korea Times that they remained positive in their outlook for LG Energy Solution, Hyundai Motor, and its sister Kia Motors as they shift their focus to EVs. That wraps it up for this episode of 5-Minute Briefs from Seoul. This has been Hee Jin Koo for KBSI, wishing you a happy new year.